let's get into Abbott as a company. So Abbott is an MNC pharma company, and among the very few pharma companies that has the highest sales coming from its domestic India business. It has a very low asset light model and has a very good market share in many key prescription drugs. So it completely stands out as compared to the other companies. So can I have the to the next slide if it's possible? Yeah. So we'll move to the next slide. I think this timing the markets is obviously something that we can't predict. And about the disclaimer remains the same. Can we move on to the next slide? So this is what Abbott says about itself and from its annual report. So I won't get much into it, and we'll look at the analysis portion. Can we move to the next slide? Right. So I was sharing with you what makes this company stand out is actually, it's among the very few companies that don't have an export, revenue. Most of Indian companies have an export market share, and there are a lot of disadvantages and advantages which we'll come to later. And it has an asset-light model, and it actually doesn't manufacture its own drugs. It outsources its manufacturing, and that's why you will find a lot of ratios completely different from the other pharma sector. So if I look at the results of Abbott, the results were just announced on 10th August. It basically seems flat, marginally below estimates as per what research reports that I've read. While on a year-on-year basis, the company performance has not been bad with its sales growing. Can we move to the next slide? So while on year, the sales has been growing from 1218 crores, 1218 crores to 1304 crores, and the PAT has grown from 195 to 205 crores. However, if you look at the comparison in the last few quarters, the revenue has increased marginally from 1255 to 1304 crores. And while the margins have in fact fallen sharply from 23.4% in the March quarter to 20.7% this quarter. So if I look at the brokerage report estimates, they were expecting the Abbott to have a margin of about 22.4%, and it's coming fairly short of the expectations, and that's because of the inflation that we all know about and the rise in input costs. So we are talking of Abbott as a pharma company. We have a lot of APIs and a lot of freight costs which are involved in getting the raw materials. And in China, with the shutdown, there has been cost pressures in the pharma sector as a whole. So it has also been slightly short of estimates, both on EBITDA and revenue, but with a very narrow miss. So basically, all in all, I would say it's a flat set of results, better on a year-on-year comparison and lower than estimates on a quarter-on-quarter comparison. And to study the results in detail, I would actually require to listen to the earnings call, and I can update you on that in the upcoming webinars. So if you look at exports versus domestic, as I said, it completely stands out with 98% of its revenues coming from India, completely a domestic player. Let's move to the next slide where it's very interesting. Again, this company enjoys a market share in key prescription drugs. So a lot of the drugs you may have heard of. In fact, a lot of our family members and elders in particular may have heard of these names. So these include Tyronorm, which is used in treating thyroid. It has a market share of 51% in India. Influvac 63.4%. Verton for vertigo, which has a market share of 30.8%. Udliv 16.7% all India market share. And some of the other leading drugs, including Digene, 13% market share in antacid segment, Dufolax, 13.9%, and Creon with a 32% market share in India. So these are blockbuster drugs, and they continue to be used from generation to generation. So that's a big advantage when it comes to Abbott. So if you look at the revenue breakup, so where does the money actually come from and where does the company earn from? If you look at it, so basically from the branded drug segment, and Dufolac contributes 30.9%, Verton 15.3%, Dufiston 20.5%, Udliv 23.2%, Tyronorm 27%. And all these are, what's very important to know is majority of these drugs are used to treat chronic problems. meaning that the patient requires to use these drugs repeatedly, giving it a sticky revenue which cannot be easily replaced. So what happens is a lot of other companies focus on the acute segment, and acute segment is a one-time use. But if you look at this company, which you can move to the next slide, I will explain you why it stands out compared to the other companies in the pharma sector. So the set of chronic drugs make up about 46%, and the subchronic category makes up 27%. And because majority of its revenues comes from these categories, the company has a high visibility when it comes to sales and profits. Because we all know that these drugs have to be repeatedly used and over long periods of time. The acute segment actually makes up a very small 27% of its revenues, and this gives the company a wide visibility in sales and profit, and that's how the company has been a very consistent performer. So let's look at the form of products. If we look at the next slide, you'll understand how different forms make up the revenue for the company. So can we move to the next slide? Yeah. If you look at it, the injectables contribute about 41% of its revenues, while the tablets contribute 38.6%, and liquids contribute 51%. So for people who didn't know, in fact, the injectables are used in hospitals. And in the hospitals, what happens is, that they have high margin products, and the hospitals charge a lot more, and that explains whenever they have a shortfall of margin in other categories, the injectables actually have a higher margin profile. Which segments does the company actually operate in? Can we move to the next slide? Segment wise, it's basically in the gastro segment, and in the gastro related drugs. Can you go back to the previous slides? The company makes about 41% of its sales in the gastro segment, 17.9% in the women's health, 15% in the nerve related, and 15% from the metabolic segment. Again, most important is the quality. So let's get back to the quality of a company. And as we said, we give a lot of importance. We actually look at over 300 parameters, and we have a proprietary score which judges the quality. And some of these parameters are common and used by 21 stock gurus, including a Warren Buffett and Ramdev Agarwal, and we can share with you the annual reports where they actually mention these parameters. So this will give you an overview of how the quality is judged. So one way to determine is to look at the sales and profit growth and the return ratio. So the company has a healthy sales growth of 10 to 15% every year from the past 5 years compared to its peers. So if you look at its peers, it's actually dipped a little during the pandemic with a growth of about 5%, but itself was a big achievement considering that it actually had a positive growth. Its sales have gone up from 4,310 crores in 2021 to 4,919 crores in 2022, which is a growth of 7.3%. Its PAT has grown from 690 crores to 800 crores from a March to March basis, year to year on year basis. And the sales growth in the last 3 quarters have been healthy, ranging from 11 to 15%. Now, this is a fun fact, or rather, I would say an interesting point to note. If you apply a filter and you actually look at the companies that are growing both in sales and profit for the past 5 years with a sales growth of over 10 to 15%, you be surprised that in the 500 Nifty companies, you will find only about 20 to 30 companies approximately matching this profile. Basically meaning that the company has been consistently delivering sales and profit growth for long periods of time. So the ROE basically indicates how good the company management is in generating returns for shareholders on its investments, and ROE above 15 is considered good. And in case of Abbott, it has a consistent track record of an ROE ranging from 25 to 29, making it an extraordinary company when you look at its healthy ROE growth year after year. So its free cash flows have also grown from 128 crores in 2018. Can you go back to the previous slide, the table? Yeah, so if you can see the free cash flows from 120 crores has grown to 904 crores, indicating it's generating a lot of cash in the recent past. It can therefore withstand major events, which again is a big plus point. It has a EPS CAGR growth of 22%, which by itself is phenomenal growth. And it's a debt-free company, and with an MNC promoter, which makes it stand in obviously, which is a very big advantage. Let's look at the price action quickly. So for those who want to look at the technical parameters, so the company has beat Nifty returns in 13 out of last 20 quarters and one out of the last 3 quarters. So it has not done very well in the recent past, but it has a fairly good return when it comes to a longer period of time. The company's share price has moved up 21% in the last 3 to 6 months and about 15% last 1 year. This is very different from other pharma companies. So actually, if you look at it, the pharma sector as a whole has given a negative, I think memory serves me right, 6 to 7%. The share price has actually fallen in the pharma sector in the last 1 year. And this company has actually moved up 21% in the last over 15% in 1 year. So the spread we are looking at is actually over 20% growth as compared to its peers. It has given shareholder returns consistently with 123% in 3 years, 358% in 5 years. Its 52-week high is 24,000, low is 15,500. The company trades. This is a little bit earlier data which I have presented. So it trades. Was trading at 18,793 with its immediate support at 18,750, strong support at 17,862. After its results, it may have fallen a bit, but this is its immediate resistance and support. It has a resistance at 20,611 and 22,036, meaning the company is more closer to its support levels. And the company turned bullish on 10th August at 19,604, I think, which it has actually broken down, and which is earlier crucial support. And it actually may act as an intermediate resistance for the short term. The company has given a return, as I said, of 7.61% as compared to a Nifty return of 7.8%. What is worth noting is the other pharma companies have given negative returns. So let's look at the valuation right now. If you look at it on a valuation, this company's slight valuations, in my opinion, is slightly on the higher side. So when you compare it with models on price to book or a gram valuation framework or on a price to sales basis, it has a fair valuation. No, but it has a higher valuation when you look at these frameworks. But when you look at it based on the discounted cash flow method or the earnings cash flow, if you look at it based on that, it can be put in the fair valuation category. Its PE ratio is 54 and its price to sales is 8.77, which is characteristics of the pharma sector. You have a lot of pharma sector stocks with high PE. This may be a little less. Yeah, it's a point to note. If we considered the forward PE, so what I shared was the trailing 12 months. Considering that it had a healthy growth last 4 quarters, the PE ratio and the price to sales must have fallen. The shareholding pattern, if you look at it, the mutual funds have increased their holding by 0.53%, which is really good. And they've done this 1.42% this year on a quarter-on-quarter and a yearly basis. FIF has almost the same holding from quite some time, and promoters hold 74.99, which is very, very comforting. So it is actually Abbott Healthcare is a global pharma company with a market cap of over $150 billion. So it always acts as a cushion when it comes to the free float available in the market and the share price, and it acts as a very low beta stock when it comes to a market, mainly because of these factors. So all in my learnings basically are the company has 715 patents, making it very difficult for others to compete. It has an asset-light model as it outsources most of its manufacturing. In fact, it has among the lowest capex of 44 crores in 2022. Just imagine, just 44 crores capex, and you will see every other pharma company investing hundreds of crores, if not more, a year, and even a quarter for that matter. and this company has just 44 crore capex in 2022. It has a wide distribution network, 4,400 stockists and 70,000 retailers. And if I memory serves me right, it's a low beta stock with 0.41 beta value. Coming back to the risk, I think and that's the last slide that I would move on to, is the learnings is on your screen. 715 patents and very low capex, a very large MNC promoter, huge number of stockists, outsources its manufacturing. So we'll move to the next slide, coming back to the risk factors. So government regulations and price caps are two important risks. So the government fixes prices on majority, fixed price caps on majority of its drugs, and a lot of the blockbuster drugs also come in this category. So it really depends on whether the government removes the price caps, or in fact, it may add price caps to some of its drugs. So this acts as a risk for all investors must be aware of. And the government regulations in the pharma sector change from time to time. So that's another risk. But a very big advantage on the flip side, as I mentioned earlier, because it being a domestic company, it has a very low dependence on FDA inspections. So in fact, FDA inspections cause a lot of volatility in stock prices, and you have a lot of times where a lot of the bigger pharma companies get stuck and cannot export their products, and it leads to a big drop in sales and profits. But this is not the case with Abbott. You will not find that because of no dependence on FDAs. Let's get into the summary. Can we have the summary slide? All in all, this company has a proven track record, fundamentally strong for the long term, only major domestic play in India, high market share in many segments, and a shareholder friendly company. The above is based on a quantitative research analysis. A qualitative and technical analysis is not done. If you require a detailed analysis of the results and the qualitative analysis, we can get on a one-to-one call, and I'll be happy to contribute in that regard. And we would be having webinars more often, so that we can address some of and share the learnings that I have learned. Again, thank you for your valuable time, and thank you for hearing my journey. Love to hear any questions that you may have on any stock of your choice, or an ITC, or an Abbott. Anybody has feedback, please feel free to let me know how you found the webinar, what improvements that we can make, any other stock that you'd like to be researched. You can unmute yourself, or I can open the chat to see if there's any questions coming in the chat window. So we have a question on IDFC first, but I think we've already overshot the time. So I don't really know if whether we can do it this time. Probably we will have it later, if you don't mind, Mr. Kanput Gatupaj. Yeah, I'm sorry, I've got your name a little wrong. Any other questions or any other feedback that anybody has?
I really liked how you presented it. It was really informative, and I was able to understand a lot. Thank you for that, Aditya.
I appreciate that. That means a lot. That keeps us motivated, and I think, to be honest with you, the company that we've set up is a group of like-minded people with the motivation of making a difference. I think that's what makes it, that's what motivates us. And you will see a lot of services with action context. And if we are able to provide value to you, that means a world to us. Anybody else has any feedback? आप हिंदी में भी बात कर सकते हो, और कन्नड़ा, if you are comfortable in Kannada, or your local language in Tamil or anything. I just happen to know 3 or 4 languages, but yeah, you're welcome to share your feedback. आपको अगर कुछ बताना है अरुण जी, आपको कैसा लगा
Yeah,
प्रेजेंटेशन?
no, no, it was really interesting. I attended this. This is the first time I attending your this one program on this. It's really we gain a lot of knowledge and good analysis also. So going forward, I would also like to say some stocks about which you can make a technical or fundamental analysis for the benefit of all the viewers here. Thank you so much. Okay. Thank you so much.
Good
Anybody?
evening, Aditya sir. This is Vijay from Chennai.
Good evening. Thank you for spending your valuable time with us.
This is great opportunity to me, sir. You guide. I have a lot of information by way of your guidance. Thank you, sir. Thank you so much.
I thank. We will be hand holding you, uh, and do join our upcoming webinars. We will make it a little more often, so that we have more and more stocks research.
I will surely join the next webinar.
Yeah, thanks a lot, Madhav, for that encouraging word. Thank you, everybody, and good night. And may God bless each of you with health, happiness, uh, and